Shweta Daptardar, who's the Vice President BFSI at Elara Securities, who's going to talk to us about some of these. Shweta, I read your note this morning with regard to credit access, and what really fascinated me was the fact that you've downgraded the EPS estimates, but you have maintained your target price. Just give us perspective on what you can what your expectations first off are from a credit access, and why not therefore downgrade the target price as well if EPS is getting trimmed.
Yeah, thank you for having me on the show. So, as you rightly pointed out, EPS or earnings have been under pressure for the whole sector per se, for all the players in the microfinance space, and rightly so, because for past over a year, we have seen this sector plagued by several challenges. So, be it overall indebtedness at the borrower level, be it increased regulatory oversight, and therefore the growth calibration as well as asset quality challenges that have been raising their ugly head. So, from that perspective, definitely earnings are under pressure. Also, referring to the even credit access Grameen's business update yesterday that came through for data for January and February, the hints are clear wherein although there has been slighter progress in terms of disbursements and loans gradually picking up, there has been observed regional disparity in terms of delinquencies across states. So, from that perspective, we still believe most of these companies are going to miss their growth targets for the full FY25 year. So, we are here talking about 4,000 billion odd microfinance industry, which was reporting 24-29% kind of annual growth until last year, and even higher, say 30% plus a year ago levels, that is somewhere in 2023, would now be falling into early single digits for FY25. So that has been one of the key parameters to sort of percolate into EPS pressures for most of these players. Second is, of course, the elevated credit cost. So while we thought Q3 would have peaked out in terms of asset quality challenges, the underlying data which has been coming through from the ground, which is still plagued by challenges of certain regional pressures, such as, say, Karnataka ordinance or floods in Tamil Nadu, or over-leveraging concerns in certain states such as UP, Bihar, Gujarat, have definitely led to more additional buffers or even write-offs, putting pressure on P&L of these companies. So that's the another reason why EPS downgrade stood imminent. Now, coming from the stock valuations perspective, so you've seen that there has been massive correction in most of these stocks and even the market leader that we are talking about here. So given the fact that the correction is already in place, the worst is already captured in the valuation multiple of 1.7x price to book FY27 or the forward multiple for credit access Grameen, we felt the downside is limited, but also upside is limited going forward. So valuations will continue to lurch. While we have accumulated rating on the stock, we continue to monitor closely the trends on asset quality as we progress in the new financial year.
So that's, Shweta, with regards to where, credit access goes in a way. But if you have to look at microfinance as a basket currently, how are you seeing the cycle from here on, number one? And what would your view be with regards to advising investors what should be done?
Yeah, so we are actually another 3 quarters away from seeing normalization of trends, both in terms of growth as well as credit quality challenges. So we continue to see sluggish traction on the business front, particularly because of increased guardrails or increased regulatory oversight in terms of per borrower and lender per borrower exposure. So, because of increased oversight from the regulatory front, because of lenders getting more cautious on incremental borrower acquisition, like mentioned earlier, certain geographies still posing unique set of challenges. We certainly believe growth challenges will persist for another 2 to 3 quarters. Simultaneously, the triggers to bottom line growth or ROAs are still missing. So we will continue to see NIM pressures or calibration on the yields front. We will continue to see credit cost continuing to sort of remain at elevated levels for another 2 quarters or so. So recovery is still distant, perhaps closer to end of FY26. We would see some respite for microfinanciers in the space. Having said that, the underlying data trends definitely are sort of inching up for better. We continue to monitor it closely. For now, we continue to advise clients to stay away from the space.
Okay. Um, okay, so stay away as of now. I also want your take with regard to everything that's happening in gold loans, because interesting, right? Today's news, which has come out, seems to suggest that not fully compliant with the gold loan guidances issued by RBI. You at a ground level as an analyst, do you believe that's the case? And if so, what pockets do you believe that there is this concern with regard to where gold loans is in subject?
Yes, we have to understand the fact that where the RBI concerns are stemming from, and that's where is we refer to the exponential growth in gold lending space, especially from the banks and NBFCs front for over 2 years now. So one concern is the exponential growth. Second is because gold price has been catching up on the higher side for several months now. There has been invariably, unintentionally flouting of LTV norms. So while LTVs have been lower at origination, they end up turning out to be higher towards the end of the tenure of the loans, leaving borrowers incapacitated to pay back the loans which they had raised, at the original rates. So that has been the primary concern of RBI. Second most important point which RBI has been highlighting is the gold lending underwriting practices. So there has been lack of transparency in terms of evaluation of the pledged gold. There has been lack of transparency in terms of ownership of the gold that is pledged. Also, there have been third party agents involved in evaluation and measuring the tenacity of the gold. So all of these have been brought up by RBI, and therefore in the interim periods, we'll see how banks. So I think it's more to do with banks than gold financiers, because likes of Muthoot and Manappuram, we felt that have been largely, mostly adhering to the norms as far as the compliance is concerned. But nonetheless, RBI is here highlighting and directing most of the players, including NBFCs, in terms of having a relook at the underwriting practices and keeping the regulator updated.
Thank you, Shweta, so much for joining us on the show and sharing the views with us. That gives you a perspective of the way you should be looking at the microfinance space, the gold loan businesses as well from here on, and the picks that you should be watching out for.